Hey everyone, welcome back to Corporate Decoder, the place where we unravel the messy secrets of corporate filings and lay them bare for everyone to see. Today we're dissecting a filing from Starwood Property Trust Inc. and let's just say it involves a whole lot of shares, a whole lot of money and a whole lot of plans. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down more of these juicy details. So what's the big story here? Starwood Property Trust just announced plans to sell a massive chunk of its stock. Basically, they're raising a ton of cash and they've got big plans for it. This is a Form 8K, which means it's a filing for big important stuff happening right now, not just routine updates. The date that really matters is July 16, 2025, because that's when they inked a deal related to selling a huge number of their company shares. We're talking about their common stock, and it's not a small offering. They're selling 25,500 shares. To put that into perspective, that's a whole lot of little pieces of ownership in Starwood Property Trust. Now, what's the purpose of selling all these shares? They want to raise capital and they're expecting to bring in about $501.5 million. And if their underwriters decide to buy even more shares, that number could jump closer to $579 million. That's a serious amount of money being injected into the company. So where is all this cash going? The company explicitly states they intend to use this money to help pay for a big acquisition they recently announced. They're buying something called Fundamental Income Properties, LLC. This tells us they're looking to grow by acquiring another company, which is a pretty common strategy for real estate investment trusts like Starwood. But what if that acquisition doesn't go through? Well, they've got a backup plan. They might use the money to buy commercial mortgage loans, other assets and investments. They could also use it for general corporate purposes, including paying off debts under their repurchase facilities. This shows they have flexibility and a solid plan B if their primary goal doesn't pan out. And this whole deal, the buying and selling of these shares, it wrapped up pretty quickly, closing on July 18, 2025. Now you might wonder about the legal side of things. They've got a whole bunch of documents attached, like the underwriting agreement, which is the contract for selling these shares. This is the actual agreement that lays out all the terms of a stock sale between Starwood, its manager, and the underwriters, which include big names like Bova Securities and Wells Fargo Securities. It's the paper trail for this massive transaction. They also have confirmation from their lawyers, Womble Bond Dickinson, that the shares they're selling are legally sound. This is standard practice to assure investors that everything is on the up and up. So what's the big picture here? Starwood Property Trust is actively pursuing growth, not just through its existing operations, but by acquiring other businesses and expanding its asset portfolio. Selling a large number of shares is a common way for companies to raise significant capital for these kinds of strategic moves. The fact that they've got a clear use for the funds, specifically to acquire Fundamental Income Properties LLC, shows a focused approach to their expansion strategy. The dual purpose of using the funds for the acquisition or alternative investments like commercial mortgage loans also demonstrates strategic foresight. It means that even if one major opportunity doesn't materialize, the capital will still be deployed effectively to drive shareholder value. This kind of financial maneuver is typical for companies in the real estate investment trust or REIT sector, which rely on capital markets to fund their growth and operations. Looking at the financials, while this report doesn't provide a deep dive into their current balance sheet, the intent behind this filing is to bolster their financial position for future endeavours. The significant capital raise suggests confidence from the underwriters and presumably from investors who participated in the offering. However, a couple of things to keep in mind. Issuing more shares can lead to dilution. This means each existing share represents a smaller piece of the company than before, or the goal is to grow the overall pie significantly enough to offset this dilution. It's something shareholders should always monitor. Also, the success of this capital raise is tied directly to the successful integration and performance of the acquired company. Fundamental Income Properties LLC, any hiccups in that process could impact the overall return on this investment. Overall, Starwood Property Trust is making a bold move to fuel its growth. They are clearly prioritizing expansion through strategic acquisitions and asset acquisition, backed by a significant capital raise. The company appears confident in its ability to deploy this capital effectively, whether for its primary acquisition target or for other investment opportunities. Alright, that's our breakdown of Starwood's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this acquisition will be a home run for Starwood? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.